Hi, this is Vijay Bambwani here. I hope you're keeping a finger on the pulse of the market and the market's treating you well. And in this video, I'm basically answering a question that a lot of my viewers and subscribers of my franchise on Equity Master have asked me. What are the top few things that I do before the trading sessions begin, and what are the four parameters or watch lists, call it what you want, I think are a must-have for every trader. Now, you're by now familiar with the way I think. I mean, it's 360 degrees worldview of the markets, including a whole lot of behavioral analysis of the financial markets all around me. So I'm going to take one top pick from each segment, and I'm going to share the secret sauce with you. Now, the first and foremost is the behavioral aspect of the market. You see how each and every trader in the market behaves by way of action, not thought, action. Every buy and sell order initiated on the exchange has a bearing, no matter how big or small, on the price. So the behavioral aspect is very, very important. Now, first and foremost, when the trading session begins, I tend to avoid trading at least for the first 5 minutes. Let me share with you the reason why. Now, there is this category of traders called BTST and STBT traders. BTST stands for buy today, sell tomorrow. STBT stands for sell today and buy tomorrow. Now, these traders are a very special kind of traders who resort to only this strategy or majorly this strategy. They enter into a trade in the last few minutes of trading session 1, say Monday. They will exit from that trade in the first few minutes of trading session 2, say Tuesday. They're not bothered about whether the price is up or down. They enter in the final few minutes and they exit in the first few minutes of the second day. Now, this obviously results in a lot of price volatility in the final few minutes and the first few minutes. Have you ever experienced how it feels to be at a traffic signal which is very densely populated by cars, motorcycles, etc.? As soon as the signal turns green, everybody is in a rush to go. And there's a whole lot of smoke and traffic and crisscrossing of motorcyclists, etc. A lot of people like me would like the congestion to clear in the first second or two before going ahead. This is precisely what I'm trying to do by avoiding trading in the first 5 to 7 minutes. Thereafter, your market stabilizes a little bit and rationality returns to the market. Believe me, it's a lot more easier to analyze the market then. And then, once the market starts trading and stabilizing, what I do is watch the top 6 to 8 heavily weighted stocks in the indices. In the case of the Nifty. In the case of the Bank Nifty, the top 3 to 5 stocks will be enough because the Bank Nifty is a much more narrower index as compared to the Nifty 50 where constituents are concerned. Believe me, if you watch these top heavy-weighted items, if you watch 6 to 8 top heavyweight items in the Nifty, you've covered at least 60% of the Nifty's weightage. Wherever these stocks go, chances are, a very high probability is, that is where the index will go also. At least for a while, if not for the entire trading session. Now that gives me enough in the initial part of the trade as a Nifty or a Bank Nifty trader to put the first meal on the table for my family. And then, of course, you can build up on it. The second aspect from the 4 top things that I watch is the news. I have made a gallery of stars. I call them my gallery of stars of people who I watch without fail. Before I do anything else, I'm interested in Googling and finding out what these guys have uttered after I went to bed in the night, but before the market is open today. So names like Shakib Khalil, Rafael Ramirez, Muqtada Al-Sadr, Ali Al-Naimi, Zaki Yamani. For weekly cash alert subscribers, I have made 6 trading tutorial videos. The entire list of this gallery of stars is in the final video where I teach you how to prepare for a trading session in the commodity markets. Obviously, for the currency markets, there's a different set of people. For equity markets, there's a different set of people and different set of news triggers. Now, why I'm looking at this aspect of the market is because a whole lot of institutions, a whole lot of smart fund managers, a whole lot of hedge fund traders. Hedge funds are something I really admire, and I've made no bones about that fact. They watch all these things before they enter a trade. Where have the bond yields gone as compared to yesterday, where they closed yesterday and where they are opening today? Believe me, a lot of people, I find, a lot of guys, financial market intermediaries, make it a point to come to clubs. I'm a member of a club in South Mumbai, and I find sales guys making a pitch for subscription to their services and offering financial products all the time in my club. And once in a while, I do get invited to the table and say, hey Vijay, look, this is what this guy is offering now. Can you just see what it's like? And I asked the guy, what do you think of the bond yields and stuff? And believe me, bonds are so boring that most people tend to turn their nose up and say, what? It's so unexciting. But you know what? This is the fountain where the money supply comes from. If you're not interested in the tap where the water flows from, you don't know where the market's headed. So bond yields are extremely important to me. I notice where the bond markets are going, and typically that is where the banking sectors will go. And that is where the bank nifty will also go. So here again, you can put the second meal on the table for your family. Also remember that in financial markets, especially from the point of view of behavioral finance, everything is anchored and tethered, which means connected to each other on the time price continuum. When you are saying that the nifty is up against what? Up against yesterday's close. So do note that you don't only watch where the price is right now, but where it was yesterday and where it was at this point of the day yesterday. So if I'm watching Nifty at 1:15 p.m., I've also noted where Nifty was at 1:15 p.m. yesterday, which is why you see a whole lot of pencils and leads on my social media accounts. I keep getting thrilled when a new click pencil or new mechanical pencil leads come in by courier. I get very excited because I'm taking notes all the time of the price, volume, open interest, etc. of every counter that I'm planning to trade, and make extensive notes of them. Making money is not easy, believe me. It's only my wife who thinks I'm doodling on the computer and making money by pressing a few buttons. It's not easy. But let's not go there. So, the third aspect, screen reading. Seriously speaking, I don't mean to discourage you, but if you're planning to be a day trader or a micro trend trader, micro trend traders are people who do not keep a trade open for anything more than 59 minutes and 59 seconds. These are extremely short-term, high-frequency tactical trading market participants. Like I told you, in BSPL India, we have a high-frequency tactical trading desk. Now, if you basically are aspiring to be a micro trend trader or a high frequency trader and you do not know how to read your screen, I'm sorry, but I think you should reconsider, because you're probably going to bleed a lot of chips and lose a lot of money. If you are a weekly cash alert subscriber and you've seen those trading tutorial videos, I've made extensive videos, at least one full video dedicated to screen reading. Now, for those who haven't seen it, due to constraints of time, I can't really go into the entire thing. But for those who haven't seen that video, if you highlight any stock on your desktop trading terminal. This feature is unfortunately not there in the mobile trading terminal apps. On your desktop, if you were to highlight a stock, and most of the trading terminals have the uniform syntax, which is F5, a pop-up window opens, a rectangular window. The top 5 buyers, the top 5 sellers, the bid and offer spread, the last traded price, volume, open interest. Now this window contains at least 3 dozen signals that a screen reader must be familiar with before he or she can get into the water and start trading. So you must be very aware of how to read the screen, how the price tethering and anchoring, which is vis-a-vis the previous trade, vis-a-vis the previous hour, and vis-a-vis the previous trading session, and vis-a-vis the yesterday's price at this particular point in time today, where it was. So you must know screen reading before you can become a micro trend trader. If you're planning to be a long-term investor, probably this is something that you can simply skip. Because the day-to-day gyrations and hourly movements, which basically gives heart attacks to people like me, who are the wicked people who are micro trend trading, is something that you're not really bothered with, and you can simply let the parade pass you by. Now the final thing, stop losses. How do you set stop losses, and are stop losses the same in case of all types of traders and at different points in time? I would beg to differ and say there is no one single kind of stop loss. For example, I'm sure you would agree with me, and I speak on behalf of most of my brother traders when I say this, but it's a very good day when the first trade of the day turns out to be profitable. You feel nice. Hey, it's a good beginning, and you feel good about it. You feel something is kosher, and you proceed with a spring in your step and confidence in your heart. So on the first trade that I enter, the stop loss is really tight. It's a very small stop loss, because if the market is to go in my favor, if my reading of the market is right, it should not really give me too much by way of a mark-to-market demand or a mark-to-market loss. There should be no big margin call on the first trade. Once that trade is squared up profitably, on the next trade, my stop loss will be equivalent to the profit that I have made in the first trade. You know why? Because if things go wrong and I was to lose money, which sometimes I will invariably, the amount of money that I lose will be exactly equal to the amount of money that I made in the first trade, which means I am against the idea of going out of pocket. Especially after I've made money in the first trade, I don't want a loss-making day. It's okay if it's a zero profit, zero loss day, but once you've covered some ground, you cannot surrender. You can't give it back. That's not a good idea. What happens in the subsequent trades? Number one, you keep a stop loss equivalent to the profits of all the trades, or you keep a stop loss as per technical analysis, supports and resistances, whichever is tighter. Which means even if your stop loss is hit, taking tighter of the two would mean that you would possibly still take some money home. It's not really a great day when you surrender part of your profits, but hey, at least it's not a loss. And subsequently, there are stop losses which I've explained in the screen trading tutorial in the weekly cash alert 6-part videos, wherein the stop loss can also be ATP versus ATP, bid versus spread, and reading those screen reading signals. So here you go. I've shared my top 4 trading tips and tricks and my secret sauce. As a real world trader, we are constantly upgrading our statistical model, our trading models, and as and when I have something that our systems throw up, I'll be happy to share more with you in future videos. So I'd say goodbye to you in this video till we meet again in my next. If you're watching this video on YouTube, please let me know what you think about this video. And in the comment section, do let me know what you want in the next one. Don't forget to like this video if you're watching it on YouTube and subscribe to my YouTube channel. Also, let me reach out to fellow traders who are interested in a 360-degree view of the financial markets and knowledge-based trading and investing methodology by referring my videos to your family and friends. Do take very good care of yourself, your friends, your family, your trades and investments. Have a very profitable day. Vijay Bambani signing off for now till we meet again in my next video. Thank you for watching me. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.